should I create an LLC or should I do a sole proprietorship? Really quick description. Again, not a CPA, not a tax expert, but just give you some quick context. Sole proprietorship means I'm doing something, creating something on my own. I'm a solo entrepreneur or a solopreneur, usually a solopreneur, and I'm just going to create this, and this will just be another tax form. I forget the name of the form in the US, but I fill it out every year. But I'll just do an extra tax form, business form. I can see the form, but I can't remember the name of it. So many numbers and letters, something C. But I'm going to fill this out, and then I'll do my business deductions and charges and taxes on it based on that. LLC actually separates you from your business, and it's saying, okay, this thing is a standalone thing. It can, from a law standpoint, it can help protect you from lawsuits, I believe, or at least help protect your assets. My wife and I have a trust for our family, so our assets are already partially protected. But that's a whole other discussion. If you have a family, pay the rack, as they say, or $1,000. Just get a will and a trust done. If you got any resources that you think are worthwhile to give to somebody else, and you're trying to create something that's generational, please get your trust together. But LLC will help protect you from that as far as stuff going on with your business. It also makes it, I guess I wouldn't say easier, but you doing your taxes is kind of like a separate event. And so you can separate your personal from your business a lot more. The freelancers that I know are kind of half and half, actually leaning more towards the sole proprietorship. And then some have done the LLC. Some of it depends on the type of work that they're doing. So if you're an investigative reporter and you're doing something on, crimes related to some type of mafia related family, but it might be of a different culture, and someone sues you for libel, if it's written, slander means that you said it on the air or it was spoken. That publication that you're writing the article for, depending on what the contract you signed with them, they might be able to take care of you in court, and they might be like, yo, you're a freelancer, so good luck with that. Not as far as your life being threatened, but more like a lawsuit against you. LLCs, from my understanding, help protect against that, because you're like, yo, that's my business entity over there, so if you want to bankrupt that business, go for it. But you're not going to touch the property, the house I live in, all that stuff. It's a separation of church and state, essentially. So it helps with that. I'll give you a simple example. When we did Cuddler, the app that we sold, we sold it now 8 years ago. My co-founder actually created an LLC. He did it right before I came on board. So smart on him. Shout out to you, Charlie. And so he created an LLC. So that when we sold the company, it wasn't Damon Brown and the two co-founders are selling this company. It was like, no, this LLC is being purchased, and the proceeds of that purchase are going to these three entities, me being one of them, right? Because we end up getting acquired for a profit. That's an example of you absolutely should have LLC, right? Because it makes it much more easier to deal with it for tax purposes, to get individuals paid. When we got acquired, it wasn't some funny stuff as far as, we're going to pay this individual. And remember, we lived in 3 different countries. Again, I was in the United States. I was in San Diego at the time. So I was in the US. One of our co-founders was in Canada. And again, the other co-founder was in the UK. So it's like, it would have been a mess tax-wise too. Instead, the LLC was based, I believe, in the UK. Okay, that was done. Okay, and now the proceeds of that LLC will be distributed to these 3 owners based on the percentages that we banged out earlier. Do not get me started, because I'm so glad that we had those tough discussions, about 3 weeks worth of discussions to figure out how much of the pie was going to be split up. We talked about that well before we got acquired. So when we got acquired, it was some heated and intense discussions with the potential acquirers and amongst each other, to be honest, to be real. But none of that discussion was who owned what, because those are already written out in contract. I have an episode that talks about this more. In fact, it is worth taking a moment, Because now I'm thinking about it, we got to talk about it. So give me a moment. So, all right, here we go. And so this is one of my favorite episodes because I keep it 100, and as they say nowadays, and I keep it gritty and honest as far as the challenges that happen with partnerships, which ties into the LLC conversation. Well, through partners, good and bad partnerships. I might change the title because it's a mouthful, but the video was done about 1.5 years ago. And I share it with my coaching clients who are looking at co-founderships. I know some that have dissolved co-founderships. Like, stuff happens. Let's be real. Shit happens. It just does. In any partnership, whether it's a marriage or business partnership, friendship, but particularly when you get business involved, which is marriage and co-foundership, they're actually very, very similar. I've done both. They're very similar. Then it can get complicated really quickly. These give the guidelines based on my, it's not even talking to experts. It's just my experiences being partners several times over. Only been married once, but all these books right here, the middle of my book catalog, which is about 8, maybe 10 books. I've done 26. I did about 10 books in a row that were co-authorships. I'm still sharing royalties with folks now because we're still getting checks. Those relationships, some of them went not so great. Some of them went fantastic. Some of them I'm so cool with now, but we're all making money together. Same thing with being married. So you want to understand those different things. This goes back to the LLC or the sole proprietorship, because that might determine what kind of partnerships you have. That might determine whether you create one. We created an LLC, or Charlie created an LLC for Cutler. Again, I appreciate his foresight. Thank God he did. Made it a lot easier. You might not need a sole proprietorship in the beginning. Again, this goes back to the tax preparer thing, where there's a certain amount of game that you can get. I know for a lot of my stuff, I haven't needed to do anything beyond my own business, like a sole proprietorship and all those things. But I know that because I've been talking to tax preparers for umpteen amount of years. Let's just say a couple decades. So that's how I know. It's not just making stuff up, right? So speaking of the money management and figuring out what you should do next, I have a show that came out, I think it was the top of the year? Had to be the top of the year. And it was a triple live show. I think it was the first, second, and third week in January. Earn more indie money in 2023. First one was start your business. Second one was build your profit. And third one, my favorite, if you've been a fan of the channel and you know my books, Passive Income. It's 3 episodes rolled into one, and then I'm doing the encore of it. Check it out. This will give you more insight. Another one, which will fall into the 2 books that I'm about to recommend for y'all, is What to Do with a Financial Windfall. And you might be saying, Damon, I would love a financial windfall. But with a financial windfall, what's the name of this episode? Tax and money tips. The more you make, the more you're going to be giving to your local, regional, and federal government. That's kind of the way taxes work. I remember talking to one tax preparer, and he's like, the good news, Damon, is that you made a lot more this year. And I actually made more than I thought I did. I was like, oh, okay. He's like, the bad news is that you owe a lot more. This is several years ago. And I was like, what kind of, right? Because it wasn't like the money was just sitting in my account. And I was like, I don't feel like I made more last year. And of course, it's like April, so it's like that money has already been allocated. Some of it might be in savings, but I'm like, that doesn't give me any comfort. It just makes my ego feel better. Excuse me. If you have a financial windfall, or even better, if you know you're about to get a financial windfall, some of the work I do, if I know I have a book deal and I'm negotiating it, I know I got a big check coming. Maybe a couple, because they sometimes break up the payments. If I already know that, then I'm like, all right, well, I need to get into that mindset. This will help you with your mindset. It's a short video. It's probably about 6 minutes long. I've shared this one a lot with my clients too, because that's part of the independent game. Money goes up and down. You want to make sure that you're ready. So, speaking of money going up and down, one of my favorite books, Sudden Money by Susan Bradley. And I think she has a new co-author, Mary Maitland. Mary Martin. I think it's Mary Martin. Excuse me. There's two actresses that have a similar name. And it's messing with my brain a little bit. But you can click on the link and learn more about it. This book, oh, here it is. This is how long I've had this book. It's hardcover, dog ears. I can't remember what the cover looks like because I took it off. I got this book. I might have got it from my mom. I can't remember. But somehow I got to this book. And I got it ages ago. But it was when I really started making money. Like, again, the book deal started coming in and stuff. And I'm as I say in my books, I'm used to ramen noodles. And now, I got 5 figures in my bank account just sitting there. It's not allocated for anything. Like, what am I supposed to do with this? Am I supposed to invest this? What am I supposed to do? Like, there's a nervousness that comes with this. I talk about this again in the windfall one. Like, I talk about this exact scenario. So if you want to go deeper, all the links are below. And this book breaks it down. Now, what works well with Sudden Money is that it's actually geared towards people like us, right? So a small part of it's dedicated to lottery winners, which I wish you the best of luck. I'd rather create something that y'all find of value and then, become a millionaire, billionaire, whatever, based on that. That's my route. I'm not, shout out to my family members that do the scratch offs. That's not my vibe. Most of this book, though, is about athletes and about creators. And athletes have a lot in common with us as creators. Some of you're not an athlete. Some of us are both. I'm not an athlete. But we have that in common in that, the Michael Jordan movie airs, I think came out a couple of days ago. And you think about him being, essentially a country boy, because he was a boy at the time, a country boy, I want to say from the Carolinas, I want to say North Carolina, very salt of the earth, as we would say down south. So very humble people. And then suddenly, he gets caught up in high school, and it's like, and he negotiates that stuff with Nike, and suddenly he's a millionaire many times over too. You're grinding it out on an app, you're bootstrapping things, and then suddenly your app becomes the number 1 app in the world. And then within 6 months, people start coming in and say they want to acquire the app. Like, and they want to give you a nice amount of money for it. Like, that mental shift can mess with you. I've been to that mountaintop a couple of times, and I'm not saying that as a flex. What I'm saying is that I know what it's like to be at the top, and I know what happens afterwards. And as someone who's been up there a couple of times, I want you to trust me with that, where it's like that mental shift. You might really want that. You really might want all that money. You might want all that fame, but there's a mental shift that needs to happen. This book talks about that. I think the term they use, fantastic term, I think I might have stolen it and used it a few times over the years, is they call it falling down the chute. So when you get that call, or you call to check your lottery numbers, or you get that call back and the agent says, yo, you got a 6-figure deal. So, they're gonna be paying us within like a week. It's not usually that fast, but just play with this scenario. Right? Book industry is a lot slower, or when you wake up, happened to be my birthday. You wake up on your birthday morning, and you check the app store, your phone's blowing up, you check the app store, and you have the number 1 app in several countries, including the 3 countries in North America. Like, it happens just like that. It's happened to me several times. That's why I'm a coach. It's like, I know what happens. It happens quick. She calls that falling down the chute. And when you're falling down the chute, you do not want to make big dramatic decisions that could have tax implications, that could break up things with family members, because it gets great, particularly talking about money, et cetera, et cetera. Fantastic book. It is expensive. This is a $50 book. But if you're doing 5,000, 50,000, bless you in the future, 500,000, $500,000 deals, you're not going to pay $50 for the book. I talk about this with some other books. Another book of mine, not my book, but another book that I copped. Money was tight. I paid $50 for the book. Made a difference of tens of thousands of dollars. No cap. So if this direction you think you're going to be going in, and or you can afford, you have the resources to grab the book right now, please just grab it. Again, this joint has been on my shelf for ages. It's not leaving my shelf either. The only reason I took it off the shelf is because I put it right here to show you. After that, it's going right back on the shelf for the next big decision I have to make. Last book recommendation would be Profit First by Mike Michalowicz. Shout out to Mike. You know, I said hi to you, I think, online during one of your events. We chatted up very briefly, but I hope you're doing wonderful. Of course, we got similar circles too, so I've been following your work. Shout out to Monique Woodard. Shout out to Mo, because she actually recommended his book, Profit First, before I even knew who he was. The setup is really simple. If you're going to be an independent creator, less so a founder, but independent creator, consultant, anything where you're going to be making indie money, just call it indie money. You need to have some type of framework, some type of system. Otherwise, you're going to be broke. Because we tend to get really big checks, and then we don't know when the next check is going to come. I got big checks coming now. I got some other big checks after that, but there's a vagueness to being independent. It's just vague. That's just how it works. I think I'm a damn good independent creator. And even for me, it's a juggle. Profit First is a structure, really simple structure that allows you to put things away for your taxes, put things away for your profit, because you are the owner and you're the employee. I am the owner / founder of Bring Your Worth, publishing, TV show and all that stuff. I'm also an employee because guess what? I'm doing about 99% of the work. So I should be paid separately just for being an owner. They get into that. And even structuring things for your employees. If you have employees, I don't have any employees, which is why, sole proprietorship makes it even more sense. But all those little details, they get into that. Fantastic book. I got it. I think Monique offered it to me or recommended it to me. I want to say right after my first kid was born, so about 10 years ago. And I got, again, like I said, I had a chance to meet Mike online and appreciate all of his other books. He also has Profit First. It's a freaking series, so shout out to him. I love the series. He's actually broken down Profit First to different things, like Profit First for real estate, not managers, but people that own variety of real estate things. But there's a term for it, but I'm blanking. But for that, I think there's a Profit First for healthcare workers, like just specific. Check it out. Start with this link, and I recommend starting with this book, and then expanding beyond there, and get into those things that you're specific about.